Welcome to Risk Minds. I'm joined today by Jason Forrester from Standard Chartered Bank. Jason, thank you so much for coming in today.
You're welcome.
So tell me about the biggest shocks in the industry you've seen this year.
Yeah, so I think there's probably two key areas we're looking at. One is the whole macroeconomic environment, the continued high commodity prices, high interest rates, high inflation, the impacts of the Russia-Ukraine war. What's the impact of that on our credit portfolio, both from a retail and a corporate perspective? And also sovereigns, because sovereigns are equally impacted by those risks, and that's something we have to carefully manage and monitor. The second big risk is obviously the failure of a couple of well-known US and European banks. That's taught us that liquidity risk is still a key area of risk for banks, and the speed with which it can happen and the fact that you need to get your social media communications right around it. I think there's a lot that we can learn as an industry.
Yeah. But as a result, what risk do you see coming to the forefront?
So I think if we take the second item first, the liquidity risk, the speed with which money was removed from those two banks is far greater than anything that we've seen before. And that was compounded by digital payment infrastructure, which wasn't around in 2008 GFC, and also the impact that social media has on communications around banks. So that means our stress tests are probably going to have to be faster and more severe. We're going to have to look at alternate ways that we can shore up liquidity if we face a similar type of problem. And we have to get our external communications spot on and quickly out into the markets. I think when we look more broadly at the macroeconomic environment and the impact on the credit portfolio, that's much more of a sort of known risk and a known set of playbooks. But really the focus there is on stress testing and really understanding which parts of our portfolios are exposed to these types of risk, and then looking at ways of mitigating that risk in advance of it happening.
It's interesting how such mature risks are under question now as a result of quite a few years of volatility. So how's the rest of 2023 looking, in your opinion?
So I think the rest of 2023 from a sort of macro perspective, I mean, clearly high interest rates have benefits to certain industries and impact other industries. And therefore, as these things always play out, there are always going to be winners and losers, and that we just need to be mindful of. I think the other big risk that we're seeing that's coming up through the rest of 23 and onwards is around greenwashing. We're seeing a lot of regulation being put into the market around sustainability, environment factors, climate risk. What is a green product? And I think when I look forward, maybe not just over 23, but over the next 5-10 years, the likelihood is that the look back risk where people say, you said something was green in 2023, is it still green when you look at the rules in 2025 or 2028? I think that is the next big wave of potential litigation risk for banks, and something that we need to be actively managing now at the very start of the process.
It feels as if a lot of people got burned by the greenwashing issue and just spotting these, as you say, having the foresight to even spot these. So what practical and strategic challenges do you see here, especially to do with greenwashing?
Yeah, I mean, I think with respect to greenwashing, the inconsistent regulation doesn't help, because as a global organization where you're looking to issue global products, clearly they can be treated in different ways by different regulators and legal systems around the world. That's a challenge. So we've got to come up with something that's very market and industry specific. I think we have to think very clearly about disclosure. Clearly, disclosure isn't a panacea to all problems, but the more that we can get the potential downside risks and the potential risks of future regulatory changes out in the market along with our products. I think as an industry, we're all taking legal advice, but that legal advice is itself developing because this is such a new area. And I think we just need to be really communicating well to our stakeholders, our boards, our investors, our regulators around the potential risk that we may face going forward, how we're mitigating it, and then actively monitoring our mitigation strategies as we go through the next 5-10 years.
Yeah, and that sounds like a really, really sensible way of moving forward. So I wanted to also ask you about some of the emerging risks that might not necessarily at the forefront at the moment, but might be crucial to address in the next 5 years. Do you have anything that's sort of still under the radar?
I think the whole use of artificial intelligence, although I would say it's not really artificial intelligence, but machine learning is a technique. I think there's a lot of potential hidden problems with that in terms of unintentional bias, wrong decision making. We saw this in the GFC with models. Models didn't work. We didn't really understand models worked, and we put in place an entire model risk framework starting with SR 11.7. AI is a different type of model. And I think certainly including it in some of our model risk frameworks is important. But having the internal knowledge and experience to independently test and validate AI models, which are very different than normal statistical models, is something as an industry we're going to have to develop over the next 2-3 years, because banks will undoubtedly turn to AI to help with cost challenges and to make their processes smarter and faster.
Yeah, 100%. So I just, as a closing thought, I wanted to talk about Risk Minds International
Yes.
later in the year. What are you most excited to learn about and discuss?
Yeah. So I think for me, just meeting up with peers from other organizations, bouncing ideas off them, helping to build the network, just speaking to people who are in the same industry and facing the same challenges. That's what I love about Risk Minds. I think in terms of the topics, climate risk is still a massive focus for the industry, and it's only going to get bigger. We're at the very start of implementing climate risk as a risk framework and methodology. So learning what other banks are doing, what is the forefront of climate risk, I think is going to be really interesting. And then I did note that AI is starting to come through. So to my latter point, I think how as a model risk function and team, we can really assess the risks of AI. I'll certainly be attending those sessions. And then finally, going back to the very first point I made, the industry has learnt a lot given the failures of 2 major banks or more than 2 major banks this year, and just understanding what other banks are doing and how they are changing their frameworks to adapt to those risks, I think will be a useful learning experience.
100%. It's almost like sharing is caring, isn't it?
Absolutely.
Jason, thank you so much for joining me today.
Thank you.